Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading. Today, market is down about 0.4%. Dire on the S&P Nasdaq 0.1% negative. Semiconductor 1.7 down flat. Russell 2000 0.5% negative. Russell banks, healthcare, utilities. These guys are green today. Energy, biotech, home builders, retail, emerging market. Down about 1% or so. Bitcoin down, gold, silver miners also. Dollar up, oil flat, treasury bond up. VIX is down a little bit. Let's do this. S&P 500 ETF. Spider! 65-minute chart here. So this is what we closed on Friday. And looks like we actually saw a down gap. And with that down gap this morning, we were not able to get above the micro-term moving average. Bears are making sure the price staying below the micro-term. And you can see the good thing about it is at least that down gap was pretty much filled. We got a little bit left, very tiny a bit, but pretty much that down gap was filled on that first hour. However, now that we're back below the micro term, and technically speaking, we are not able to get above the micro term for quite some time, maybe entire week or so. I mean, we were just slightly above it on Friday, but we needed to see a follow through, which we talked about, and with that down gap. And with that, as you can see, first hour, second hour, third hour, definitely that support we've been talking about, 393. Held, and buyers made a little bit of a move here, and you can see we were not close above that micro term, so we're still below the micro term moving average. Micro term sentiment is still bearish, being below that. My short term moving average currently trading at residing at 392 or so, but I think this is an interesting pattern right here, the triangle pattern. And when you see a pattern like this, you can see the resistance right here and here and here, and the support here, 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 here. When you see a pattern tightening up like this, a lot of people think that we're going to have some smooth breakout. It's never more often than not, sometimes once in a while, if the market feel like it wants to be generous, it will give you just perfect breakout and it will just be very, very smooth. A perfect breakdown, it'll be very, very smooth. But a lot of times what it's going to do is going to do a little head fake and come right back down, little downturn and go right back up. Just keep that in mind when everybody's looking at certain type of patterns such as this symmetrical triangle pattern. It's not always going to be a smooth breakout, and you can see clearly where it's going. But the levels are clear though. I mean, we might see shenanigans in this vicinity. And so we have to understand how this market closes by end of tomorrow might tell a lot versus what's going to happen the first 2 hours tomorrow morning, right? So the levels are clear though. If we do see a nice breakout, if the market decided it's going to be generous, 398 is where the buyers are looking to fill this down gap right here. And that might take this entire week if we do see a breakout, or maybe a day or so. We don't know as of today, depending on how it's going to break out and how it's going to close tomorrow. And you can see that 393. This is important level just because of this entire week. This level, and last Friday and Thursday, you can see, when I say this entire week today, Monday, and Friday and Thursday, that 393, it has been that level of support in the micro term, right? The micro term moving average is acting as resistance. The micro term horizontal support. So that's the level we need to break below that. And also there is the short term moving average 392, which is acted as support here. And then we got the 390. So this entire vicinity is actually pretty solid support right here. And so these are the levels that if we do see a breakout, and bears got a little bit more challenges here just because with that 393, we got the short-term moving average 392 and 390. Bulls, they just need to get above that micro-term And it looks like there's a good chance there aren't any strong resistances until about 398. Let's check out that oscillator. So that oscillator is pretty much flattening out. That pretty much telling us that the oscillator is basically saying, yep, I don't know. Or, you know what I'm saying? We don't know where this thing is going. We're tightening up here, consolidating. I have to wait and see. That's what this oscillator thing. I have to wait and see if this thing breaks out to the upside and hold up until end of the day tomorrow. You will see this oscillator kind of getting back up. And because oscillator already got a little bit of momentum here, we're in the middle of nowhere, right? The middle section, right? Because we've already seen this sort of a momentum, continuation to the upside will give more strength to this move. However, if we fail, this thing come right back down, you know, the bears been very hungry for a while, so they might get pretty wild. And so this is kind of the level where the oscillator is not favoring either bulls or bears. Oscillator, it's actually pretty rare to see oscillator is actually pretty neutral. Understanding that we have this symmetrical triangle pattern and we're trying to figure out which way it's gonna break out. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening and go train tomorrow.